Okay, this is Australian dollar USD, and since I'm following this currency pair and I'm marking the waves and correcting myself, but uh, today I'm talking about this setup. This is a very nice setup. So earlier I was of the opinion that 1, 2, 3, 4, and 5 there'll be an A, B, C, and then 5 wave decline. But right now I've changed my wave count. I've counted this as 1, 2, 3, 4, and 5. But think that the fourth wave is not over yet. Why? Wave 4 is looking like an expanded flat correction to me. It's looking like an expanded flat. It has A, B, C, first wave, and then A, B, C. Now we should have 1, 2, 3, 4, and 5. So our setup should be 5 wave decline, and this wave can be traded because this is an impulse wave. So within a corrective pattern, you have an impulse wave 1, 2, 3, 4, and 5. So this will complete the entire correction. Okay. So this is my first wave count. What is my second wave count? So one can trade this 1, 2, 3, 4, and 5. And the expectancy is how much? Say this much. So this can go all the way to this point, like this 1, 2, 3, 4, 5. So this is 1.6. So the wave theory says that uh, this wave is equal to this wave or 1.6 ratio. So within say this much, this let me see how much. So my first target would be this much, and once it crosses this line, my second target would be 1.6. So this wave can go this much, and this will complete the entire correction. Fourth wave correction, it will complete. Now this is my first wave count. This is a very good trading setup. ABC, ABC. This is the kind of setup which we basically look forward. I mean, whenever we are looking for certain patterns, those people who practice wave theory, they look out for these kind of patterns. This is a expanded flat correction. It will be an expanded flat or a running flat. In a running flat, this will not breach this line. ABC, ABC. It will not go beyond this. Then it will be a running flat correction. Otherwise, it will be an expanded flat correction. So this is a wave which can be traded, right? So this is my first wave count. The alternative wave count is this, that generally those people who practice wave theory, they rely more on ratios. They rely more on Fibonacci ratios. So if I see the Fibonacci part, then this much retracement is more than 38%. So fourth wave retracement can go up to 38 to 61%. That is the limit. So if I take this, see, this is 38% and it is more than that. So ideally, if somebody is going by the ratios, by Fibonacci ratios, then fourth wave is up. Though the waves are not very clear, but I can say that fourth wave is up. And we are in the fifth wave. So this can be like this. This is my second wave count. Okay, one, two, three, four, and five. That will complete the five wave move up, and then there will be a decline in form of ABC corrections. Decline will come like this: A, B, and C, like this. So these are two counts which I'm. This is my alternative count. This is my second count. My first count is that this is an expanded flat correction. Now, how to trade this? So if I suppose if I were trading this currency pair, then I would take this as my stop loss. This would be my stop loss, and I will take a bearish position here all the way down like this. Five wave decline. So that we are going to see tomorrow whether it is my alternative count is correct or this pattern will work out. This is my first count. It's looking like an expanding flat correction, but you never know how the market behaves. So all the best, guys. And this is a nice trading setup and short trade on based on the daily charts. And all the best. Happy trading.